This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Poland has urged European Union member states that are still buying Russian energy to end those imports by the end of 2026 and will offer them help towards achieving that goal, Energy Minister Miłosz Motyka said on Wednesday. The Druzhba oil pipeline delivers Russian oil to Hungary and Slovakia, which continue to buy energy supplies from Russia after other EU nations cut ties following Russia's full-scale invasion of Ukraine in 2022. The European Commission will propose speeding up the phasing out of Russian fossil imports, the EU executive head Ursula von der Leyen said on Tuesday after a call with US President Donald Trump.
Oil prices declined for a second session on Thursday, after the Federal Reserve cut interest rates as expected and traders focused on concerns about the U.S. economy and excess supplies. Brent crude futures fell 13 cents, or 0.19%, to $67.82 a barrel by 0417 GMT. U.S. West Texas Intermediate futures dropped 18 cents, or 0.28%, to $63.87. The Fed cut its policy rate by 0.25 percentage point on Wednesday and indicated it will steadily lower borrowing costs over the rest of the year, responding to signs of weakness in the jobs market.
Moving on to the top news in the energy sector.
U.S. crude oil stockpiles fell sharply last week as net imports dropped to a record low amid a jump in exports to a near two-year high, the Energy Information Administration said on Wednesday. Gasoline inventories also declined unexpectedly in the week ended September 12. While distillate stockpiles rose more than expected, the EIA said. Crude stocks fell by 9.3 million barrels last week to 415.4 million barrels, the EIA said, compared with analysts' expectations in a Reuters poll for 857,000 barrel draw.
A rebound in China's imports of seaborne thermal coal has helped prices recover, but the boost is likely to prove temporary as recent strength in coal-fired electricity generation eases. China, the world's biggest coal producer and importer, is expected to import 27.41 million metric tons of seaborne thermal coal in September, according to data compiled by commodity analysts Kepler. On a daily basis, September's imports are tracking at 914,000 tons, just shy of the 925,000 in August, although the final September figure may be revised higher as Kepler assesses more cargoes as likely to be unloaded before the end of the month. Next, we have the top news in metal markets. Shanghai copper futures hit a more than 1-week low on Thursday, falling for a third straight session, following a 25 basis point interest rate cut by the U.S. Federal Reserve and higher supply from top consumer China. The U.S. Central Bank cut the benchmark interest rate by 0.25 percentage point on Wednesday, in line with market expectations. Traders closed some long positions to cash in profits on bets of the rate cut and the wave of profit-taking continued after the rate reduction, weighing on prices of the red metal used in power and construction.
European firms are expecting more shutdowns and suffering losses as Beijing continues to hold a tight grip on rare earth exports despite a July agreement to fast-track shipments to the bloc, the European Union Chamber of Commerce in China said on Tuesday. Irrespective of the agreements and commitments reached at the EU-China summit on the 24th of July, we continue to see significant bottlenecks for our members, Jens Eskeland, the Chamber's president, told reporters. Automakers in Europe and elsewhere faced production delays and widespread shutdowns after Beijing introduced export controls on some rare earths and related magnets following tariffs announced by US President Donald Trump.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures fell on Thursday, erasing the previous session's gains, as the contract tracked losses in soyoil after a U.S. biofuels proposal disappointed the market, while a weaker ringgit also weighed. The benchmark palm oil contract for December delivery on the Bursa Malaysia Derivatives Exchange lost 50 Malaysian ringgit, or 1.12%, to 4,425 ringgit, $1,055.33, a metric ton, as of 0233 GMT.
That is all for today
news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.